Hello to all dear traders. With a simple search, you can find hundreds of educational videos that talk about Forex education at a basic level and spend hours stretching out a simple topic, which makes the audience more confused. But today, we're going to teach you, in the easiest and simplest way possible, exactly the things that will help you in trading. I'll avoid anything unnecessary in this video and only teach things that are entirely useful in the world of trading. Because I promise to explain the most fundamental topics in the shortest time and in the simplest way, we will start with the first topic that a trader must fully learn: candlesticks. Forget everything you know about candlesticks, everything, because you're going to learn only the most important aspects of candlesticks. Each candlestick consists of four main parts: open, close, high, and low. The first price at which the candle starts is called the open price, meaning the initial price. For example, when we look at the chart in the daily time frame, let's say the market opens at 8 a.m. and the first trade determines the open price. The last trade that happens determines the close price. When the close price is higher than the initial price or the open price, it means the candlestick is bullish. And when the close price is lower than the open price, then the candlestick closes as bearish. When the price reaches a certain number and comes back again, it forms a shadow. Whether this shadow is formed above or below, its size and all of this are very important. In the price action style, you must pay attention both to the close area of the candlestick, where the price has managed to close and stabilize, and to how far the price has managed to go, in fact, the very tip of the shadow. The distance between the open and close prices is also called the body of the candle. The language of candlesticks. When the price has a small body and a relatively long shadow on one side, this candlestick is commonly called a pin bar. It is also called by other names, but those are not important. What matters is understanding what this candlestick represents. The price opened here, then sellers entered the market and managed to drive the price down to this area. But exactly there, the game changed and the buyers came in, reversed the entire downward path, and pushed the price up so much that they even succeeded in surpassing the open price and closed above it. So now, currently, the power is in the hands of the buyers. In a bearish candlestick, after the price opens, buyers come in and push the price up. But as soon as the price reaches this area, sellers enter and reverse the entire path, even pushing below the open price. So now the pressure is in the hands of the sellers. The point to pay attention to here is that the shape of the candlestick is more important than the color of the candlestick. Look at these two pin bars. The pin bar on the left is bullish, but the pin bar on the right is bearish. Question: in which candlestick is the pressure in the hands of the buyers, and in which is it in the hands of the sellers? You have 5 seconds to write your answer in the comments. I hope you answered first. If we decide based on the color of the candlestick, it's simple. The pin bar on the left is bullish because it's green, so the power is with the buyers, and the pin bar on the right is bearish because it's red, so the power is with the sellers, right? Of course not. The shape of the candlestick tells us that the shadow is coming from below, meaning there was pressure from below pushing upward, so the power in both candlesticks is in the hands of the buyers. Now the bullish candlestick is slightly stronger, but both indicate the presence of buyers. This means understanding the language of the candlestick. Doji candlestick. As its shape shows, the price opened, went up, came back down, went back up again, and closed at the same open price. So this indicates indecision, meaning once the power was in the hands of the buyers, then the sellers, but in the end, they were both equal. This is why the price has formed almost equal shadows on both sides. So this candlestick is telling us that the price is indecisive. Now that you've learned this well, I want to explain another big part to you in the same simple way so you can learn that too. But if you've enjoyed the video so far, Please give it a small like to motivate me and prepare better content for you. When you learn about candlesticks, the combination of these candlesticks forms trends and shows us the direction of the market. We have three types of trends in the market: bullish, bearish, and range-bound. Bullish trend: when the price forms a high and a low, and then breaks this high and forms a new higher high and higher low, we say the bullish trend has started. Look here, the price has formed a high and then a low, then breaks this high and moves upward to form a higher high and a higher low compared to the previous one. So now we are in a bullish trend. Until the last low in the bullish trend is broken, we will remain in the bullish trend unless we enter a range-bound market. Bearish trend: when the price forms a low and a high, and then breaks this low and forms a new lower low and lower high, we can say that the bearish trend has started. The exact same rules apply to a bearish trend as to a bullish trend. Until the last high in the bearish trend is broken, we remain in the bearish trend unless we enter a range-bound market from there. Range-bound market: when the price forms almost equal highs and lows and moves up and down within a range, we call it a range-bound market because the highs and lows are approximately equal. In this case, it's clear the highs are equal and the lows are almost equal. Notice I said almost, so sometimes they may be slightly higher or lower, but overall they fall within a range. As simple as that, you've learned a significant portion of the trading world. If you'd like me to teach other parts in the same simple and practical way, be sure to let me know in the comments. Remember, prime risk is exactly where you need to be to become a trader. See you soon.